Analysis, the Sunday show. It's good to have your company today. We are well at it and ready to get into all things trading. It's been a fascinating week in the market. Hi, Veronica. How you doing? It's been a fascinating week in the market. We've seen some genuine weakness, more or less. That weakness has been predicted out of Gordon's show. One of our market analysts has been calling for last week, particularly Friday, to be a down day. And so we got the big down day Monday, Tuesday, Wednesday, and then the pullback on Thursday and Friday. For mine, it's been a fascinating week, and we do look forward to seeing how the next week unfolds. I expect the team to come in and to give me some help with that reasonably quickly. So guys, I'm just seeing a couple of things on in the background, and whenever you do things on Zoom, it can be a bit tricky to get back. Hey everybody, nice to see you guys. Great to see so many people in the room. I'm just waiting for Julian to come back in. I'll just drop him a line and see where he is. He won't be far away, I am sure. Let me just drop him a note quickly. Sorry guys to keep you guys waiting. I'd like to stay on right, I've got Ainslie in the room, I've got Geoff in the room. We will get around them. We've got a number of people in the room. We're just going to see if Julian is far away. I don't think he will be too far away. We will have a packed up show today. Let me get to this. So we're expecting to have Julian in a few minutes to do macro market overview. I know we've just done that in the bigger session. And hey, Lewis, how you going? And after him, we will have Ash into the market data, Ainslie at the Golden Edge, Shukri to do some crypto, Ainslie back on golden oil, and Geoff. Julian, how you going?
Guys, sorry. Oops, that was a bit of a... I do apologise. I was actually looking at charts and I got completely carried away. And when I spent my time going, oh my God, really? Really? Okay. So, thank you, Paul. Welcome, everybody. For those of you that haven't been with me for the last hour, welcome to everybody, wherever you are in the world, once again. And what I want to talk about today is key themes, okay? So when I think about key themes, I think about the things that are driving markets, both in my head and from a technical basis, what I'm seeing out there in the street. So I think we can safely say that the tail end of last week was a little confusing depending on which market you were in. If you were a corn trader, you had a very, very bad week. If you're a wheat trader, you had a bad week. If you're a gold trader, you were bouncing off the side drinking champagne on Friday evening. So there's a lot going on in different markets doing different things. And I also forgot to say, if you're a cryptocurrency trader, then what the hell was that last week? Elon, please stop talking. Just stop talking. And then I think the cryptocurrencies will be in a better space. So I think what's really important here is that there's a lot going on. There's a lot of volatility starting to appear. Now, why is volatility appearing? It's because everybody has positions that are one way. And I think that's the key thing here, right? So if you go back and look at some charts, right? You go back and look at some charts of any of the cryptocurrencies going back to last year. You go back and look at a chart of corn over the course of the last 3 to 4 months. Oh my God. If you go back and look at a chart of gold, oh, hang on, no, gold's been boring, hasn't it? So that's why maybe it was up on Friday. Interesting. Okay, interesting. Okay, and then if you go and have a look at some of the stocks as well too, you know, I think last week we can safely say Tesla did not have a good run. It bounced a little bit towards the end of the week, but didn't really have a great week. Hasn't had a great month. Already not so good. It did go to 980, I believe in January was the high in that stock. And where is it now? It's got a 5 in front of it, so maybe not so hot anymore. Who knows what's going to happen next? Maybe eventually it might go a little lower. We'll see. I think the target in Tesla, for the record, is about 382. But anyway, right. So look, what are my key themes? Things that happened last week that worried me a lot was the jump in inflation. Now, people will brush it off because that's what people do. I don't. I'm a bond trader by precedence and by history. So as a bond trader, of course, I worry about inflation. That's my job because interest rates and inflation is inextricably linked. And so when I see higher inflation numbers, that concerns me. And if you're running leverage positions in any market anywhere on the planet, it should also concern you as well too, because higher interest rates mean that you probably have to start thinking about deleveraging the book, and if you don't, somebody else will, then you're forced to do it. So what happens is people tend to jump ahead because they all try and outthink each other. So higher interest rates traditionally aren't very good. So the question is, are we going to see higher interest rates in the very short end, or are we going to see higher interest rates in that longer end, that 10-year sector of the curve, where the Fed maybe doesn't have as much influence as it does at the front end? Well, the short answer to that is yes, they seem to be heading in that direction, stabilizing but higher than they were a week ago. And for those of you that look at a chart of the 10-year note yield, you look at an open high low close, you will see a crazy spike which happened over unemployment day. When was that? That was like already an age ago, but it was only 6 days ago. So here's the theme that I've got running through the world right now. Inflation is picking up a little bit more than people think. Now, what does that mean? When you combine that with interest rates, you can figure out what your real interest rate is. So you have a nominal interest rate and you have a real interest rate. So that's the interest rate adjusted for inflation. So interestingly, that means in the 10-year note yielding about 1.7 and inflation about 2.8, we have a minus 1% real interest rate. Okay, now who likes real interest rates better than any other asset class in the world? You've guessed it, it's gold. And Ainslie's just gone hooray. Which is like a great segue to her talk later on. And so I don't need to say anymore. All right. And for those of you that are interested, gold has been going up for the last 2 months. When we look around the world of assets out there and see how they're all performing, it's definitely the best performing asset of the last 6 weeks. Take note, everybody, because that is the key message that you've got to get, right? Let's get on the train of the things that are working and not worry so much about the things that aren't working. Okay. So this is how I'm thinking about stuff. Now, foreign exchange, how does that translate in foreign exchange right now? Here's my theme. When you look at the weekly charts, all you're seeing in front of you right now is a test of the previous high. It's going on in euro, it's going on in British pounds, it's going on in Japanese yen, it's going on in the Swiss franc, it's going on in the Aussie and the Kiwi, apart from the Canadian dollar. Now, interestingly, why is the Canadian dollar in a mind of its own? Well, the Canadians have always had, as we know, a mind of their own. They're a very nice people, but they have a mind of their own. They may also have a few commodities as well too. So what's going on right now is the Canadian dollar is the currency du jour. It is the one that everybody likes the best. Who knows where that's going to stop going up? I don't know, but when you look at dollar CAD, it just seems to be a progression downwards, and it's really hard to ever fight that. But it has been going down for months and months and months and months and months. So therefore, that trend is also long in the tooth to the downside. So I'm not saying there's a trend reversal coming. There's a risk of a trend reversal coming, which is the key thing. So be on watch, right? And with all the other stuff, if we are just retesting the top, is this maybe an opportunity to start thinking about US dollar longs? Just from a trading perspective, I'm not talking about something structural. I'm not talking about the end of the world or anything like that. I'm just saying that maybe there could be a time when the US dollar might rally. And don't forget, those interest rate differentials between the US dollar and everybody else are getting bigger and bigger and bigger and bigger. So how long do you want to keep buying all the other currencies for when you can just buy US dollars and get a super duper yield? 1.5% these days is something to actually get excited about. People get excited about that. You can't put a negative interest rate in your back pocket. Okay, what happens is somebody reaches into your back pocket and takes money out. With the US dollars, when you invest in 10-year notes, you still actually have the opportunity to put some money into your back pocket rather than have it taken away from you if you're trading European bonds. Okay, so there's my key themes for the week. How much time have I got left? I've got like a minute left. Guys, as far as I'm concerned from a trading perspective, let's see what happens. This is where sellers have showed up before in the currencies. Is it going to happen again? Be on watch for potential reversals. I'm not saying that anything else is going to happen apart from that's where sellers have showed up before. I love gold. Oil is always a tricky market to read at the moment. That's trading near the highs. And if you want a resilient sector of the stock market right now, you look at XLE, which is the ETF of the energy sector stocks. That has traded tremendously well versus the rest recently. It's almost like a low volatility long play at the moment versus everything else. So that tells you that the market is very comfortable owning energy stocks, which suggests to me that oil has got further to run into the 80s and possibly the 90s. The question is how we get there, because whenever you seem to be trying to buy it, it just comes straight back in your face again. So try and trade it as easily as best you can with a really wide stop loss. Be very careful, as we know oil is a bit like a cryptocurrency. You need to have big stop losses, and I'm sure Shukri will talk about those later on. That's it for me, guys. Thank you very much for listening, and good luck next week with the trading. Let's see how we get on.
Thanks, Julian. Thanks as always for your look at the market. Always look forward to your thoughts on it, and certainly an interesting period